Okie dokie. All right, thanks to everyone joining tonight. I really hope everyone had a great Easter weekend and enjoyed the predominantly lovely weather we had across New South Wales anyway. I hope every other state did as well. Taking advantage of the 4-day weekend's always a good thing, and if you're smart enough, you get a couple of days either side as well. But guys, thanks for popping along tonight. Now, tonight's a little bit different. What I want to talk about tonight is just more of a bit of a conversation. So I brought this forward a little bit. So I didn't plan on talking about this tonight, but I've had a lot of questions over the weekend and last week particularly about the market. So I want to talk about the market quickly, especially this will probably be more around the New South Wales market, but I wanted to quickly talk about the marketplace just to explain the difference with the way we find property to traditional ways of buying property. So from an investor's perspective, there's a difference between a wholesale property and a retail property. Now, the difference is, at the end of the day, when you're paying retail, you're obviously paying a little bit more than what you're paying wholesale. Now, in the property market, what we're seeing is the retail market and the wholesale market is definitely becoming a massive gap between the two because of the demand out there in the marketplace. Now, I'm going to relay this more towards the New South Wales market. That's the one that's suffering the most at the present time. But if you're an investor out there at the moment looking in the retail market, you're going to struggle. You're going to pay way too much for the property, and it just concerns me. I've heard so many things, so many stories over the last couple of weeks of properties that have gone 100,000 over reserve for auction. How the asking price or the price range might have been 500 to 550, and people are paying $630,000, $600,000. That's ridiculous. Why are you doing that? That's just stupid. If you're an investor and you turn up to an open home and there's, say, 20 to 30 people there, don't even go inside. You're going to be competing against all these people. What's the point of taking on a property in this marketplace when it's so expensive? You should be really concentrating on the wholesale market, not the retail market, if you can. Not everyone can do that, but I'm just saying if you can focus on the wholesale market, that's the better way of doing it. Now, I've got two quick pictures to show you guys the difference between a wholesale market and a retail market. So I'm going to quickly share my screen. Bear with me here. So retail market, simple. Retail market, Retail market is a ready to go house and land, for example. Doesn't have to be a house and land, can be an apartment or a townhouse or whatever. This is a house and land ready to go, but you're going to have 20, 30, 40, 50 plus people at this open home to look at buying this property. So why would you compete with that? Why would you go out there and compete with that saga of trying to create a bidding war for yourself and whoever else is involved? And the only people that are winning out of this are the real estate agents and the sellers. All right. So we want to try and avoid the retail market if you can. Now I'm going to show you what the wholesale market looks like. All right. This is a funny one for you. This is the wholesale market. All right, it's just trees. All right, so the wholesale market, when I talk about wholesale and retail, is you have to be a little bit more patient in the wholesale market. So the wholesale market is basically when the land is not registered, it hasn't been subdivided. You'll get that land a lot cheaper than if you're competing against a retail market up against everyone else in the marketplace. So say, for example, in the federal government had a lot of incentives for first home buyers to build. It was 25 grand and a 15 grand. Now, but they've got to build within 6 months. So you've got to understand the land that they were looking at was land that is ready to build on today or ready to build on within a 3 to 6 month period. So that's construction starting. So many first home buyers have to take ownership on the land within 2 to 3 months to make sure construction starts within that 6 months. So that's what you're up against, and they're paying whatever. I honestly don't know how they're getting their bank loans approved, but because the bank valuers wouldn't agree with the price they're paying for the land and the building, etc. So what I'm trying to explain to people is be patient. Patience is the key factor to successful investing, waiting for the right opportunities to make it work for your portfolio. With The wholesale market, a lot of that is what we call unregistered or off the plan. That's where you physically can't see it or touch it. But if you've got trust in people who can help you find these wholesale properties, you will make a lot more money. Of just some simple scenarios is we found a property. This is just a simple scenario of 569,000, I think it was, brand new in the wholesale market. And then I had another client resell only, it was one suburb away. It was literally walking distance, comparable property at 650. So that's the difference between a wholesale market and a retail market. Now, a lot of everyday Australians don't have access to that wholesale market, but the wholesale market, just broken down for you quickly, is a market where a developer wants some pre-sales on the land or apartments or whatever it is you're choosing to add to your portfolio. And first home buyers can do this as well, because a 15 grand incentive is not worth paying $100,000 more for a property, but everyone to themselves. But realistically, I'm talking a lot lately about wholesale and retail, because purely the retail market is just pushing up out of control versus the wholesale market. So be patient, focus on cheaper wholesale, what we call stock or properties, and that will, of course, give you better returns on investment. Now, that leads me into my next scenario, where we have a lot of investors asking me, should I be selling my property right now? Now, I'm always a big believer you should only sell a property for a good reason, and that could be obviously to pay down your mortgage. You might be not well, you might want to help your kids out, you might want to pay down other sort of debt, business debt, car debt, etc. So if you can make a difference in your lifestyle by selling off your property, first one to say yes, but just make sure you reinvest and rebuy another property. Now, if you're selling in the marketplace, this is the definite good time to sell. So if you're in the market to sell, go ahead, get your property on the market, get rid of it before this massive influx stops. Now, but what you've got to remember though, if you're an owner occupier, be aware that if you're going to sell in this market, you also have to buy in this market. So you're not really going to win out of that scenario unless you're going to a totally different area, which may be a little bit quieter. That will make a difference. So if you're out in the marketplace, just be a little bit careful that you're not paying too much for your property, and you'll know you're paying too much because you'll either A, be in a bidding war against someone else, B, there's a million people at your open home that you're competing against, or C, the bank actually may not value the property for what you're paying for it. So it's like a bank valuer will always have a 5% variance, sometimes 10% in some areas, but if you worked on a 5% maximum variance in purchase price versus what the valuer from the bank may say, that's okay. But I've seen valuations on some of the retail properties coming in up to 100 grand less. Now that's a pure sign that you're paying too much for the property. So the biggest thing I want to talk about today is I just don't want people to, as an investment perspective, owner occupier, you obviously if you're going to stay there for 20 years, it's not going to matter. But with an investment perspective, be aware and sharpen your pencil when you're out there in the marketplace. Try and look for wholesale properties. A rule of thumb for me is if you're attending an open home, you've already missed the wholesale market on that property. A wholesale property you will buy before it hits the market. So if you're attending an open home, you're already in the retail space. Even if there's only 5 people there, to a certain degree, you're already in that retail space. You really need to network well with some real estate agents and pick the good ones. Like every industry, there's good and bad, but pick out some really good real estate agents, network with them, so you find out about a property that's coming up for sale before it even hits the market. For an everyday Australian investor or just everyday Australian purchaser in this marketplace we're seeing at the present time, for me, that's the best sort of strategy I can offer if you don't have anyone that can help you get wholesale properties. Is just really get in contact with a couple of good real estate agents and they will help you find a property. And if you don't go out on the marketplace, you will not be competing against 10 other people. So therefore you should get it a little bit cheaper, especially if you're buying for an owner occupied purposes. Definitely try and get that in place for yourself. All right, so that's for owner occupied that's wholesale versus retail. Because what we're seeing is there's some pockets that are just literally out of control. So some suburbs are in such high demand, properties aren't even going on the marketplace. So if you're trying to buy as an investor, that's what I talk about here, as an investor, stay away from those suburbs. Stay away from those micro bubbles that pop up, because you're only going to lose money. Try and stick into the wholesale market or in a bit of a quiet market. Or another scenario is a fringe. So if you're in suburb A, and then that is what we call a micro bubble, where that little pocket, it might only be a few streets, it might only be one suburb. Go to the next suburb, where it's not so busy and it's not so crazy. You'll find a better value property, and you will obtain that ripple effect, which ripples out through the suburbs from when you get to your major sort of capitals or your main suburbs out to your more quieter suburbs that weren't looked upon as nicely over the years. They'll become a much nicer suburb, especially when it comes down to the price. Because just remember, you're buying the property when you're buying the property is when you're making a lot of your money, not necessarily when you sell it. It's how much you're paying for it in the beginning. Now, look, if you're going to buy an owner-occupier, live there for 20, 30 years, and you pay 50 grand too much, it's not going to matter in 20 or 30 years, and you need somewhere to live. But just be aware, wholesale versus retail, because there's a lot of pressure out there on the rental market as well. So you really need to be 100% prepared if you are going to rent a property as well. So what I was going to chat to you guys as well is, because sorry guys, tonight's more of just a general chat, just a bit of information out there in the marketing place. Is what I wanted to chat to you about is what have we got here? Yeah, I just wanted to stop people making some poor choices in the property investment market out there. So if you're within our group here today and you really want to make do or make effort in getting a wholesale property, give us a shout out and we can help you and give you a direction on how to get a wholesale property in place. But at the end of the day, guys, use your common sense. If you're at the marketplace, like I mentioned before, and there's too many people at open home, you're going to end up paying too much. Do not be in a competition for the property. I really get concerned when I see that in the marketplace. All right, guys. So do we have any questions for tonight? Because tonight is a little bit of a chit chat rather than just me going through a presentation as such. But a lot of people get concerned about buying unregistered land. But a good contract, which, you know, we've done contracts. I'm not sure how you guys are watching this tonight, how long you've been in our group, but we've gone through contracts. So if you buy property, you know, off the plan or unregistered properties, you've got contracts to protect you. You buying the wholesale market is not, I don't believe it's much of a risk rather than buying in the retail market. If anything, buying in the retail market, you're paying too much. That's a higher risk from my perspective than buying in the wholesale market and having to wait 12 months for the land to be subdivided. So at the moment at the Property Bloke, all the properties we're finding for people is we're really focusing heavily on the wholesale market, and we're teaching everyone just to be patient and wait. I would not wait to buy. I would wait until the property's finished. There's a difference there, because when these properties are finished, you're going to get equity uplift in the land or the house and land or whatever you're deciding to buy. Whereas if you physically wait for that land to be ready, you're going to pay more for the land. So why not lock the property price in? Get, if you can, lock the build price in as well, if you are going to build on the land itself, and just be patient and just wait it out. At the end of the day, when you're buying property, it's not just for tax benefits. It's not just buying a property because your neighbor, sister or brother or mum or dad have bought one. Property is about making money and putting strategies in place around the property you're selecting that suits your portfolio. It could be a tax strategy. Sometimes they come into play. It could be a cash flow strategy. It could be a growth strategy. So depending on what your strategy, make sure you're buying within your strategy, within your comfort zones, and also for the right price, guys. So I won't bore you too much tonight. I'm going to get Jess to pop in the 15-minute link tonight, guys. But with that 15-minute booking link. So what that does is, if any of you have a quick question and you want to know a little bit more, just feel free, a book in with me direct. It goes directly into my calendar. I'll give you a quick call for 15 minutes, ask any questions you want, and I'll just go through some scenarios of what I can and can't do for you. But Jess will pop that in there later, if not before. But guys, be careful out there in the marketplace. I've seen too many people losing money. Sorry, start again. I see too many people paying too much for property. So really focus on your goals for your property portfolio, your actual strategy for your property portfolio, and stick to your rules. always have rules when buying property. And if it's outside your rules, do not buy it. Never become emotionally attached to a property when it's for investment. Always think of it as a business perspective. I'm a huge one that thinks that, sure, you've got to be able to live in the property, or someone else has to be able to live in the property, but don't become emotionally attached because, I don't know, one doorway isn't where you would put it, or the kitchen layout isn't where you would actually be comfortable cooking in the kitchen. But you know what? Tenants just want a place to live at the present time. So a good quality property is all you need to find. That's a good quality size that can affordably be tenanted with prospective tenants. All right, guys, thanks again for watching tonight. I'll come with you next week with obviously a lot more information. I do like sharing as much information from my brain as possible. But if there is a few subjects you guys want to discuss, I have had a lot of requests for the rent to rent. I say it a fair bit on here. It's one of the strategies of my 6 strategies I use with property investing. Personally, I am going to put together a pretty decent rent to rent sort of video in about 4 weeks. I'm just in the middle of preparing one at the moment. But if you do want to hear about anything else through the process, feel free to reach out, put some comments in here. I want to know what you want to learn. But of course, I'll pick and choose whatever I need, which I believe will fit with the audience. But this whole year is about starting a property portfolio right up to what we call next level investing or professional investing. But we are getting we are getting a lot closer to the juicier stuff that you might find a little bit more interesting, a few more case studies, and also, of course, with the next level investing where you can make money a bit quicker, but of course the risk level does increase as well. But I want to make sure that everyone within our group is a confident property investor and making money in property investment. Guys, I'm Wayne Jessup, the property bloke, bringing you real property, real strategies to obtain real results for the everyday Australian. If you need me, my link's in the comments. Feel free to reach out or message us on Facebook. Happy to chat, happy to help anyone with their property needs. All right, guys, have a good one. I'll chat to you soon.